piece is going. There we go. Okay, cool. So, number one, obviously, I covered. Good morning. This is Simon with Trade and Perform Coaching, doing the market preview for March 24th, 2025. So, a couple of things that are important for this morning. So, number one, we're gapping big. So, we already know on the algos when we gap big that the performance in terms of the two-sided performance is pretty slow. Currently, we are trading at. One second. Hold on one second here. I am thinking. One sec. TT. We're up 245 points, right? So we already know that. Excuse me, 321 points. So we already know that giant gap puts the market, puts the algo in a difficult position. So there's one of two takes, right? So if you go look statistically, the gap fills aren't that big when we have massive gaps, right? So here's the easy way to figure out if we're likely to go for a gap fill or if we're going to run over. And there's three ways to do it, and we obviously need to scale that down to what's the easiest way for us to see it, right? So, so the way that we do that is the easiest way is to do it from the gap on Sunday evening, right? So take your 50-60 retrace. Start. That's pretty much the low. I may be off by it. Yeah, that's the low, right? And just go to where we are right now. So bring it up like this. Okay, so there is your 382 50-60 is right in here, right, in the overnight. And you can obviously see, so we had a consolidation here in Europe, right? So you'd think they would try to defend that the first time, and then we had a consolidation here in Asia, right, where we broke, and this is the breakout into the European session, right there at 2142. So you would expect that area to get responsive buying, and obviously I'm not talking algos firing or anything else. What's clear to me is if you make an impulse move below this level or wherever that level is by the time we open, but this is clearly coordinating with the right now with the breakout from the European session. So an impulse move below there, right, would bring up a test of Globex lows, right? So that would be this right here, obviously. So Globex low, and then you would have the gap fill from Friday on the close, which is approximately right there at 19,450. That's the other key area. And then obviously you have, do we trap above or below Globex high? So I always get bitten when I say this, right? So the logical thing to think is, well, if you look at the larger chart picture, here I'll go to the 60 tick. Did I mean? Oh, that was the 60 tick. There we go. There's the 60 tick right there. Okay. So if you look at the 60 tick, right, and you draw this back, this is what you pretty much see, that we are trading over the last swing high where they attempted to fail. So normally you would go, let's see. So when I think about this, you would have expected this to get broken or retested, and they quite haven't been able to do it just yet back over here, but clearly that 19,397 to 19,400 area is important. And then you would have thought that you would have had failure above this point right here. See that was the swing high when we were consolidating off the break of the high. And now so two things. If this is going to be a balance area, we have to break back in below 19,986, right? And you'll see each time they're poking their head above 19,986, although it can be a significant amount over 19,986, we've been failing and falling back in, right? And currently the bottom of that balance area is right down here at 19,607. So you have to keep moving the bouncing ball based on where they're coming in and coming out, right? So the obvious answer to this, if you look off to the left, all of this is poorly auctioned up to 23.41, which would seem to be a logical place to try. And then the other is this 24.63 area. I'm ballparking these. I don't have them exactly, right? So that kind of gives you a picture right? So you get caught in this dilemma now, right? See how we keep failing here? We get over, we fail. 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 So the first thing I would look at in terms of the recent history, which would be everything from the 17th through today, basically last week, is the first thing I'd want to know is, do we trade back underneath? So you want to make a mental roadmap of what you're looking at. Do we trade below 2054, right? 2054, that's still 300 points away, right? So what we'll use is, if we do open drive higher, we'll use the 50-60 from the open to see what the rotation looks like, right? But really the easiest thing to say is, go back and look at your data. That was the whole point that I was pushing towards as you collect your data. The whole point I'm pushing towards it as you collect the data is, the whole point of that is, as you grab it up, right? As you grab that data up, how do you reset for the month, day, week, and how do you know when coming in, like, how am I doing? So there's a couple of questions you want to ask. Are we above or below the 5-day moving average, right? Has the volatility changed? Has the regimen changed? The one thing you'll notice is, I would have said that this was a dead cat bounce right here. See this move here that we had from the 14th? I would have said, oh, well, this is a dead cat bounce. And if you look on Twitter, because there's plenty of bears, they would have said this, right? Big down that we've had the last couple of weeks, dead cat bounce, and then we come up and that we are going to head lower, right? So let's say that was the scenario you were playing with. So two things happen when we go lower. The first thing is, you don't start making higher highs and higher lows, and you don't trap very easily off bottoms. But what you'll actually see is, we're trapping really easily off these lows, generally speaking, or we're finding ourselves unable to break these lows. So that doesn't scream of weakness, but not only that, but when you look at this, you would normally say, well, look, the highs shouldn't be able to be broken very easily, but they're constantly breaking the high. See how it puts in a swing and it breaks it, puts in a swing and it breaks it. Like, it's doing it constantly. And then the other hallmark, like if you go back a couple of weeks ago, right, see that right there? See how we can't break a swing, you get 50, 60s back, there's nothing being broken. This is easy shorting territory, see that? This is easy short. You can just look on the chart and go, oh, look, it can't make it back to the last swing. When it gets to the last swing, it exhausts and has these giant rotations back down, right? See that? That's easy shorting territory. The other thing I say in the room consistently is that the shorting territory doesn't last very long. So now look at that picture. Now look at the current picture, right? Does that look the same? Because it doesn't to me. If you keep pressing your shorts in this environment, you had some good short rotations, right? But they're whereas back over here, if you shorted, right, and you said, I'm not covering, you freaking killed it. Look at that. It's just down, down, and more down, right? Now, so think of the mentality, right? Because if you understand the mentality, you understand what your opposition's doing. The mentality was over here is, I can just short and I make $1 bajillion going down because it never comes back against me. Not only that, but I can fade into the moves because it's just not rallying very much, right? So take the trader. Think of when you were a bad trader. It's the best way to do it, right? Oh, I'm going to keep shorting up into this. Just like the buyers who go long and they get buried when this kind of market comes up. Now think about the short traders. I'm going to keep shorting into this. And they're like, look, I'm so smart. I took some heat, but look how much money I made. Hundreds of points on NQ, right? Now they get over here to that same scenario like last week, and they do the same thing. Well, I'm just going to keep shorting into this. I'm going to keep pressing down. I'm going to keep shorting lows, right? In particular, that's the other thing. You shorted lows over there and you got rewarded, right? And now all of a sudden, I'm going to short into lows, right? And you're getting crunched. So see how that's changed? And you'll see our data changed even within the algos. The shorts didn't work as well. Longs started working better, right? And trades became a little bit more scarce because we transitioned in the market is what happened, right? So the way that the market presented itself changed. And so now equate that into the room, right? Take the next step. If you'll look, I think everybody was profitable last week. I didn't hear from anyone who lost money for the week for a whole at all. I heard some people had some down days, but no down for the week, right? But no one had a big up week either. Okay, people had a good week. Dr. Jeff had a good week. That's about it, and he's not in the room very often, right? So, by the way, Dr. Jeff has been withdrawing $2,500 a week now for the last couple of weeks. not a week, every 10 days. Apex is whatever their Apex rule is. I think it's every 14 days or 10 days. But he's been pulling $500 per account. He has all 300K accounts. He has five 300K accounts, and he's been pulling $2,500 every 2 weeks from those accounts, right? And he's done the solution on that with regards to the trader's been the same. He slow walks it, right? When he's qualifying it, he does it between 1,000 and 2,000, and he turns it off. And now that he's qualified it, when he gets to 1,000, 1,200, he turns it off, right? Because of the consistency rule that they have for the first 3 weeks. But he's been getting paid on the regular as well, and so have several other people in the room, right? And that's really cool to hear. So as we're right, as we are working through this market, right, you can see that the up has started to work. That also means that when we go into supernova on these charts, the upside's working better. And now we've come all the way down to where we have this exhaustion, right? So the first thing that you look at when you look at this exhaustion, right, is you're going to go, well, what's going to happen when it pulls back? So we have 3 choices, right? The fantasy choice is I can short the open or somewhere near there and it comes all the way down. But the statistics tell us the odds of that actually happening are pretty poor, and particularly if we can't get back to the 50-60 retrace, right? So let's talk about that for a sec, right? In terms of choices as a trader, right? So my first choice as a trader is, and the easy one is, it's a big gap, and I already know that from my stats that the algo doesn't do that well on it, right? So choice 1 is I can do nothing. But, okay, so you should have 2 columns, logic and emotion. Okay, logically, right, that's a great answer. Hey guys, you protect your capital. If you short, you can get swept into running up, etc., etc., etc. And the easiest thing is just to skip till Tuesday, and I can prove to you that just statistically and numbers wise, Tuesday, Wednesday, Thursday are our best days financially. Okay, so that's choice 1. But emotionally, right, now picture your options before you get there. We open up, you short the opening print, you take no heat, and it goes straight down to 19,950. Okay, so 2 things happen here. If you don't take that trade, so I'm going to use Dan as an example because Dan's super aggressive. Right, so Dan won't short when it's going straight up, but if he sniffs any weakness, he'll start going at it. Right, Dan, if I'm misspeaking, just bop me on the head. Okay. So so I'm going to pretend like I'm Dan. Damn, Simon sat there and talked to me about how. Excuse me 1 second. I gotta take this call from my wife. Give me just 2 seconds. Hey, everything all right? Okay, give me 1 second. I'll be right there. Guys, give me just 1 second. I need to run over to my house real quick. I'll be right back. Sorry about that. Okay, choice 2. The way I look at it. So you got to prepare yourself for either situation, right? If you think it's short and you can't handle it going straight down without you, then you got to fire, right? Choice 2. You come over here and you go, okay, if I can get past, I'm going to look for a long into this area, okay? But again, all of this is poorly auctioned. You can see how it went straight up, and there's really no structural support in there to trade off of. Okay, so there's a risk of just it running straight through, which again can lead to the scenario of, damn, I knew I should short, instead I tried to go long and I got smoked over here. Okay, choice 3, right? And this is all without support of the using the GEX, right? Choice 3, well, I think it's short. I'm going to wait till it gets underneath the 62 retrace. I know at some point we will counter rotation back up, and I will look for my short setups to come in and do the gap fill from there. That's my choice, okay? My choice is I want to see it actually fail, get below the 62, counter rally, and then I'll go to work over here. Okay, that's my best scenario for a good trade. Okay, this is without the assistance of the GEX at all. Okay, and then when we get into gap fill, I'd look for responsive buyers in this area, and then it'll probably be so late in the day by the time we get here, unless we just straight fall apart. Different scenario. So in my mind, so that I don't get agitated, so this is all going to my mental risk management, right? I've accepted that I'm not going to be able to short this, okay, because I don't want to get caught in a scenario. My personal issue is when the market goes up like this, and I've decided that it's up too far, based on whatever emotion I had, right, is that each little thing that looks like a short, I'll try to short, and even if I scrape out of there, break even, I'll just get totally agitated, and I'll start with, you know, why is the market going straight up? Why are we doing this? Yada, yada, yada. Doesn't everyone know the world's on fire? And pissed off, right? Okay, so that scenario has to go for me because it's just not worth the stress. The scenario where we open up and go straight up doesn't work for me because I'm not going to buy up 324 points after a multi-day of rally. It's not me. I already know that, so I can take that off the table. So the best scenario for me is that we open up, we do open drive lower, we blow up that 62 retrace, we retrace, and I get set up from here for the short using the GEX. That's the easiest scenario for me to manage my emotions. And then when we come in for the gap fill, right, if we get the gap fill, start looking for longs down here. In other words, I don't think we fall apart completely unless it, and then my foil to that will be if we're clearly in trend down and we can't rally, I'll know it, right? I don't need help with that, right? The part that I need help with is not knowing before I get in there, okay? So that's the part I have to add. Obviously, shorts are in a very bad position to start off the day, and we'll see if they puked it overnight or not. In reading about the gamma, okay, and I am not an expert on the gamma by any stretch, but I do rely on others who are, and what they said is this, okay, and this is referencing the SPX, not the ES, okay. So what they're talking about from the gamma, okay, is that right now, because of the way the gamma is, it says, hold on one second, I want to read this to you because I think it's important. Okay, none of this is conclusive, it's just insightful. Okay, so it says, hold on. Okay, short-long volatility barometer is beginning to rebound from deeply negative levels. The shift suggests traders are reducing long volatility positions, implying less fear and a possible return to risk-on mindset. If LSVB continues to rise while SPX holds steady, it could signal a near-term bullish reversal. However, caution remains warranted. Should the LSVB roll over again, it may indicate fresh hedging activity and renewed downside risk. Okay, and then it goes on to say SPX is currently trading at 56.67, sitting in a high volatility danger zone dominated by negative gamma. Keyword, there's negative gamma. Okay, exposure between 5600 and 5700. This positioning forces market makers to hedge in a way that amplifies price swings. That's the important part. I want to say it again. The positioning of the options trader forces market makers to hedge in a way that amplifies price swings, selling into declines and buying into rallies. Okay, so that's why when we get frustrated, right, we already go, well, the market's already moved, but because of the way these market makers and the options are positioned, they are forced to throw fuel onto the fire, right? So and that increases the potential for sharp intraday moves, right? So just remember when a move gets started, right, and it starts accelerating to the downside, that's because market makers are having to hedge, okay? And which is why our gamma strategy works so effectively when it flips. It's because those guys have to come in and cover the other direction, and instead of covering when it's going down, they're covering when it's going up, right? So it's weird. I still can't claim that I fully understand it, but I know how to make it work together. Okay, so lastly, let's talk about our strategy for today outside of the bigger picture manual trading stuff, right? So number one, I know the algo does not do that well when we have a massive gap up. So I'm just gonna keep it off until I see that it's trading well, right? I'm not afraid of leaving money on the table in exchange for seeing that do I have an environment that works well or not. And let me tell you the mistake when I wrote my notes this weekend. I did not run both sides of the 122 algo. And the 122 algo did very well on Friday on both sides. Okay, here I will show you. Let's see where I am at. Here's 122 TMP. I've got to turn on my trader still, but I'll get to that. Okay, here's the 122 TMP from Friday, and it was long at 9/11. This, by the way, I want to point something out. This purple at the very edge down and purple at the very edge over here has led to huge swings both ways, both stuffed and not stuffed. It has led to very, very big swings. Okay, so there was the long back there. This is the next long. This is longs. I don't have, where's my shorts? This is 122, right? Oh, shorts is on the other one. So these are the longs. There's the 1046. I don't know if I had another long on this day. And there's the last long at 1407. Okay. Here are the shorts. Long shorts. There we go. Here's the shorts. It had a good day. I just should have run it more just as is, right? But I figured, nope, I knew it was better than that. So here's the shorts. Short one. There's short two. That's break even or stop. It wouldn't have fired. It's at 855. Depends if you have an 854 or 856 stop. There's the next short right there. Opposite. Again, the opposite stop +5. Survived that trade. There's the next short that stopped. There's just no way that made any money, unfortunately. There's a second stop, and then your third trade cleaned up the last two there. You got the extension on that one, and I think that was it for the rest of the day. Okay, so every time I try to predict when this thing will work well, it almost, what I wrote down is it almost always turns into an error. I should just let the thing run, the back test and the data support, just letting it run on a balanced environment. And finally, let's let the GEX determine which side we're going to lean on in terms of our directional trades. So I'm still cleaning up ES. It's not quite ready for prime time. It seems like on ES, with regards to the GEX trader, is a 5-tick right now seems optimal. The 9-tick doesn't generate enough trades. It has to be done, and 9-tick is better on a contra environment trade. And then what I'm doing is I'm adjusting. I'm getting a second trade or so on this. So if you'll go back to Friday, where we were long all afternoon, the GEX trader didn't take that many trades. But what I want it to do is, so I believe starting at 11:12 is when we went positive on the GEX on Friday. And what I want it to do is take these trades, see with the orange square and the purple square and the green stuff, but see how it's not getting to the fourth channel. So I want it to take these with the squares in the direction of the GEX um, that and the top of the channel, and so that's what I'm working on today on getting that adjusted. So again, all of this, well, the gex is invalid here at the end of the day. And if you look at it on the inverse, like if you go back to this was a short day, this 3-3. Let's see here how we opened. 8:30, we were trend down, and we were negative gex all day, if I recall. So I'm doing this from memory, right? So if you look, here's 9 o'clock. I want it to take, so initially I'm going to push it at the, just at the 4th channel. But what I want it to take is this, which it already will. Possibly this, even though that would have been a stop. This would have been a stop. But I'm just telling you how I'm reprogramming it, because most of the time it gets the rotation. And again, I'm just memorizing. I don't know whether the gex crossed or didn't cross. I want it to take that. And so the first step, I have to do it in stages so that I don't get caught out. I want it to take that, obviously. I want it to take that. See how that one wasn't at the 4th channel? I want it to take that reversal right there. So I want to take that reversal. So right now this trade doesn't get, this one does get taken, I think, but this one doesn't get taken. I want it to take that. I want it to take that. I want it to take these here. And so see how I can look at it and go, yeah, see, it goes down when I take these, but I've got to plug them in and make sure that they actually do what I think it's going to do. I want it to take this. So ideally, like when I picture in my mind, I go, oh, I want it to take this and roll with it, right? But I got to make sure, because that means I'd also, so I just set up some rules, right? Like, for example, how many bars up before I get that orange square? Because otherwise I'll end up shorting that as well. So I want the red and I don't want that purple in that particular position, right? And right now what we take is the white, okay, which is fine, but I'm trying to add trades in the momentum part so that it'll grab those if I can get them set up with the turn. Part of the problem is actually getting the bar to set up. Like, see how this is 2 up, then down, and sometimes that gets taken, sometimes it doesn't, right? Whereas I probably don't want it all the way down here in the bottom of the channel. So what Sean, Bill, and I will work on today is getting these fixed so that there's a few select trades that work really well that we're not getting right now, and we're going to try to duplicate that into the chart book, and then we're going to execute it, see if it'll work so that we can accelerate. But at any rate, that's what I'm working on the Trader Assist. The important part of the Trader Assist, I want to remind everybody, okay? The Trader Assist is there to help you, okay? It is not a bot, okay? It's not supposed to be run blindly. We know we had the momentum and the lining up with the gex, but it's an imperfect momentum, okay? And you still want to look at support resistance. Like, for example, the next logical stage will be saying, look, a gex in unfair pricing to the downside is more desirable than an unfair pricing because you get gluier, right? Reversals tend to come better out of unfair pricing, and that'll be kind of the next stage. The other thing to remember on the Trader Assist, and we're open, by the way, so I'll just fix this. Sorry about that. The other thing to remember on this is that, so first of all, if you traded 10 micros since January 15th, you're up about $19,000. Okay, so therefore, if you traded 30 or three minis, you're up about $60,000 if you just turned it on and off. That's an important number to remember, not because it's a big number or a small number. It's an important number to remember because what I constantly see people wanting to do is cover off the Trader Assist, and instead what I'd encourage you is just trade it small enough size to let it do its thing, right? It's why I'm so hesitant to bring new people onto that, because you just got to let it work. Now, there's nothing wrong with going, I made $1,000, I'm good, right? I'm all right with that part. The part I'm talking about is, oh, it took a stop, let me go fix it really quick. Or, oh, it's down money, let me go pick up the money. And also, it's not supposed to replace you as a trader, right? If you don't want it to, right? Like, it's not supposed to go and be perfect. It's just simply supposed to go and say, hey, I'm going to go and make these adjustments. I'm going to go and take these trades under these circumstances, and it's all pre-programmed, right? But I'm not going to go in and, how do I say this? I'm not going to go in and try to cover off or prevent its losses, and I'm as big a violator as any. I suggest you keep them completely separate. The trader assist, should hold its own without any help from you. If not, I've done it wrong. Okay, the trader assist should hold its own without any help from you after you look at it over a 2 or 3, 4 week period, right? And what that means is this: when the market's not favorable to trading, it should be trading relatively flat to slightly up. Okay? And when it gets in its groove, it should be making a lot of money. That does not mean, so if you're, for example, if I'm a day trader, right, and I see, oh, yellow dot up, trend up, we've pulled back, ES is long, I'm going to go long the yellow dot. Well, the algo right now doesn't go long that yellow dot, right? If you think that's long and you think that's your trade, it's coming up and backside testing this yellow dot, well, go for it. I'm never going to tell you, oh, you shouldn't have traded that trade, or what were you thinking, or any of that other stuff, right? I'm just not going to do that. But on the other hand, right? On the other hand, if you are if you're getting, well, I'm trying to think of the way I'm trying to phrase this correctly. There's nothing wrong with you doing your instinctual trading. I'm going to give a good example. Joyce, right? Joyce, I'm going to pick on you. Joyce, you should never be saying, well, the algo lost money, therefore I stepped in and made the money back, right? What you should be saying is, I had the algos running, the algos were down a little bit for me today, and in my own manual trading, this is what I did, right? But the goal of the trader, for me, right, is for it to do a job that will produce P&L and capital into my account, independent of how I do on my own trading, right, over time. That is the point of the trader assist, is for it to make money independent of what I do. Therefore, if I wake up sick one day and find myself unable to trade, or God forbid I should pass, and my wife needs to make money or my kids need to make money, they can turn on that trader assist and it will make them a decent sum of money. That is the goal of that, without them knowing shit about the market. That is the goal of that. Okay? And that's how that is the best way to look at that. That is the best way to look at that. Okay? And it shouldn't need to be anything else other than that, right? It's to help you fill in the gaps when you're not at your best, or it's not your market, or it's just another diversification into day trading, right? So I prefer to do the majority of the heavy lifting, and then what I can do is free my mind up to look for the better trade setups, right? So anyways, that's my 2 cents, and we will just kind of go from there. I don't have anything else to add. I think it's going to be a good week. Tuesday, Wednesday, Thursday are the best days. Do not stress Mondays and Fridays. Do not, especially when we gap up. See how there's so low volatility, right? And like I said, for me, what would happen is I'd go, aha, it's short. And then I'm like, fuck, why are we hitting new highs? Right? Doesn't everyone know we're already up 300 points? When in reality, I'd be the one that's wrong, because the majority of the time, a big gap like that doesn't fill, right? The big gaps tend not to fill. So, and it's a percentage thing. Does anyone have any questions? Because now's the time to ask. Because I'm going to be working on hammering out a few adjustments to the trader assist today. Thank you for the. So 8:45 we have flash PMI services. 12:45 Bostic speaks, and 3:10 Bar speaks. 2:10 our time. So going into the last hour, I'll be well done by then. 1:30 is my last trade. And right now it looks like it's a trend up and maintaining that trend up. Everyone in this room should be able to do what Dr. Jeff did. He followed a pretty straightforward formula. If it got to $2,000, he turned it off. Between $1,000 and $2,000, he turned it off. Then when he got it funded, it got to $1,000, he turned it off. That equates to $5,000 every 2 weeks on 5 accounts. Took him a month and a change to qualify those 300K accounts. Okay, a month and change, and he did no manual trading in that period. And there were some down days in there. Bill is doing very well. Bill, why don't you share how you're doing? Oh yeah, and Dr. Jeff was on 20 micros. 20 micros doing that. Bill's doing very well. Bill, how many accounts do you have qualified now? You're not very, you don't brag very much. All of it auto-traded, correct? Or trader assisted, correct? All of it trader assisted. 5 funded, and I believe 2 were in position to be withdrawn from, although he's not withdrawing from them. Okay? And they're all big accounts. They're not 50K accounts. Okay? And how long did it take you, Bill, to do that? And Bill's the most conservative guy in this room, hands down. 2 months. He's the most conservative guy in this room. He fucks with his machine. Sorry for using those terms, but he does. He turns it off when he doesn't like it. And Bill, you're trading 10 micros, and what's the most you'll lose in a day? $900? 900. So there's another formula that you can do it different than I do it. Okay? 5, 250, 2 months, 900, max loss. And anyone can do that. Anyone. Yep. So he's not even trying to get to $1,000. You start multiplying that across 5 accounts, it's $1,500 a day. $7,500 a week. $7,500 a week. Obviously, you're not hitting profits every day, but yeah. Times 4, $30K a month. It's a lot of money, right? So he's not breaking the bank. He's not doing anything incredible. He's not nearly as aggressive as I am. He doesn't have any home run days. He just has good days. And he's usually done by 10 o'clock, 11 o'clock in the morning. Okay, so anyone can do it. It's all capable. And Bill, how's your stress levels? What's the improvement there? Okay, that's fair enough. Let's see if Gex is working this morning. I need to start my... And guys, I